Here in this video, we will be going over everything you need to know about Tesla stock today, where we currently sit on a technical basis, and, well, what to expect tomorrow from Fed Jerome Powell. We are getting some pretty strong insights from the markets today in what we can expect, and I'll break that down and put it into clarity for you. Among other things we need to cover in this video are some of the other Fed speakers and data coming out tomorrow, as well as the option activity we've seen today in Tesla stock and much more. So I urge you to watch this video in its entirety. In the meantime, if you're listening to my voice, hit that like button as well as subscribe to the channel because it's free 99 and costs you absolutely nothing to do so. And it helps spread the Tesla message, let's be honest. The more people that can watch these videos, the more people that inevitably will end up profiting from this as long as Tesla does well. And again, I'm not a financial advisor, so that's just something you can do. So let's start with what happened today and a little bit of good news and bad news heading into Jerome Powell tomorrow. Good news is today you had 10-year Treasury yields that actually fell about 3 basis points, down to 4.47%. The bad news is heading into Powell tomorrow, the VIX is up almost 8%. Now, how the VIX works is it measures calls and puts on the S&P 500. So if there's more calls going in on the S&P than puts, the VIX will go down or stay down. If there's more puts going on to the S&P option chain than calls, you will see the VIX rise. So with an 8% up day for the VIX and the S&P being marginally lower today, that's telling you there's a lot more puts than calls being bought today for this week. Now, there are obviously other events taking place this week, but Jerome Powell coming tomorrow is going to be a big one. Speakers in recent days have made the argument that maybe we're not even at neutral, that maybe the neutral rate is higher than what we previously thought. And I believe that just highlights how behind the ball the Fed truly is. And if Powell takes that same approach, that's going to be seen as a big negative for markets. Although, judging off of the Russell 2000 being the outperforming index today, that's probably not what is going to happen. I believe Jerome Powell is going to sound very dovish, if not just cautious on the economy. Now, if Jerome Powell is too cautious on the economy, that's not going to be a good thing either. Markets are currently assigning a 9% chance of a rate cut coming in the next Fed meeting. That is 4 weeks, 2 days, and 22 minutes from now on June 12th. And then on July 31st, the markets are assigning a 27.6% chance of a cut, 70.4% chance of a continued pause. September is the first Fed meeting in which you're actually expecting the Fed to cut rates. There's a 49% chance of a cut September 18th and a 35.2% chance of a continued pause. Based on what Jerome Powell says tomorrow, the odds are going to move around quite a bit for rate cuts. I believe Jerome Powell being dovish tomorrow and maybe just outright cautionary on the economy is probably going to raise the odds of a cut coming July 31st. Now, here's why I say if Powell is too cautious, that is going to be a bad thing for markets. Because if the economy weakens too much, if Jerome Powell sends off those kind of vibes or signals, that's bad for company earnings. That's bad for valuations of markets. Slight weakening with the expectation that inflation falls, then now that's a different story. That's the best case scenario. As bad as everyone wants to see the economy weaken and get worse from here, that does have negative financial implications for the markets. And the Fed cutting rates is not going to offset that. That would be net negative for stocks, especially when you're sitting at near all-time highs for markets. Now, what I find very interesting about tomorrow's speech from Jerome Powell that comes out at 10 o'clock in the morning tomorrow The next day, you're going to get CPI that comes out at 8:30 in the morning. Jerome Powell's made it clear to us before. I was surprised when he said this, but he did say Fed officials can get data reports a couple days sometimes before they are released to the public. So likely today, Jerome Powell got the report of what CPI is going to be coming on Wednesday. Depending on the stance that he takes in his speech tomorrow, it's going to tell you direct implications for how CPI will be on Wednesday. If Powell is not as worried about inflation, if Powell is more cautious on the economy, then maybe that means inflation came in lower than markets are expecting on Wednesday. Vice versa, if Powell sounds more cautious on inflation, that maybe they're not restrictive enough, or maybe they need to raise rates again, or anything across those lines, that's obviously going to be seen as a negative, and maybe that CPI is going to come in hotter than expected on Wednesday. So I think Jerome Powell's speech being the day before CPI does make it a little bit more important. Now, coming tomorrow morning as well at 8:30 a.m. Eastern Standard Time, you will get PPI month over month and core PPI month over month. These are going to be important numbers. So for the PPI month over month headline, you're expecting 0.2%. Last month, you came in at 0.2%. So PPI, think about it like this, is producer price index or producer price inflation. The inflation the companies are feeling. CPI is consumer price index or consumer price inflation. So PPI, if PPI goes up, that tends to lead into CPI. Also worth mentioning is recently we have seen GDP come in lower than estimates, service, manufacturing data points coming in lower than estimates. Last week, you did have the first rise to initial jobless claims that you have seen in a very long time. You have to go back about a year to get initial jobless claims as high as they were last week. And then if you look at the last non-farms, you came in 60,000 jobs lower than expected. There's definitely some weakening out there, let alone companies like Starbucks and McDonald's and others warning about the consumer. It's important to remember that inflation is simply the willingness of the consumer to spend money and to buy things at higher prices. Think about it like this. I was telling someone about this recently, but you can think about inflation like this. If, let's call it Walmart, needs to have 100 people come through the door every day, just to keep this very, very, very simple. If that's what they need to, stay in operations, let's call it, and prices are just so high, the consumer is doing poor. If they start to see 90 people going into that Walmart every single day, you're definitely not going to get prices going higher. But if you have 150 people going into Walmart every day because people have a lot of money and they're able to buy things, then you're probably going to see inflation. And if, for lack of a better analogy, if you start to see less people, like 80 people a day going into that Walmart, then you might actually start to see some deflationary pressures. Now, deflation is obviously not good, but the point here is inflation is mostly correlated to the consumer's willingness to spend money. You're definitely starting to see the consumer cutting back. I think that does put some pressures on inflation and pressures to the downside on inflation. So that could be not really a leading indicator, but something I have been watching in recent weeks that would suggest this latest round of inflation you've seen in 2024 is probably not here to stay for the entire year. And maybe April is the first report that we start to actually get some progress on that front. Coming out tomorrow morning at 6 o'clock in the morning, you will also get the NFIB Business Optimism Index. Now, this could actually be pretty important as well because, take a look at what this index has been doing for a while now. In December of 2023, you came in at 91.9 points. The next month, 89.9. The next month, 89.4. And the month of March came in at 88.5. You're actually expecting this will fall yet again down to 88. So if you're seeing businesses that are not nearly as optimistic as they were previously, that's clearly not great. I mean, this is the least optimistic businesses have been in a very long time. I mean, this is a 10-year chart. A 10-year chart. You are at the lowest level of business optimism you have seen in 10 years. If you pull this out to a max chart, you have to go back to, let's see, the double dip fears, double dip recession fears back in 2012 or so to get a number that is as low as you are today. And that number came in at 87.2. It wouldn't surprise me if the number tomorrow comes in even lower than that. And that's a pretty bad sign for the overall economy. I mean, your Rona crash lows, this number came in at 90.9. So you're well under that right now. And if it drops further, well, yeah, that's not great. Tomorrow, about 50 minutes before Jerome Powell speaks, you're also going to get a speech from Fed Cook. She'll start speaking around 9-10 a.m. tomorrow, and that could give us a little bit of an insight to what Jerome Powell may also say, because I doubt it's just Powell that gets these inflation reports. I'm sure it's Fed Cook, Fed Bowman, Fed Bostic, and probably every other Fed official that gets these inflation numbers as well. Now, here's a little solace for the bulls out there. This post was written by Seth Golden and says, prior 5-month rally has been one of the best in history, but the totality of the bull market is anything but. Still time in the clock, but SPX, S&P 500, first 2-year bull market performance running well below the average of 54.9% at 40.9% to date. Bubble? What bubble? Meaning that normally when you go into a bull market the first 2 years, you can have some very big returns. Right now, it's close to, I wouldn't say average, close to the low end of average. Fed Jefferson also said today that the economy has made a lot of progress, but inflation has retreated. So potentially that's a little bit of a heads up that Wednesday CPI report could come in on the lighter side. You also had a new survey that came out today. Polling 108 economists, 65% of them say the Fed will cut rates by 2 times in 2024. That's 50 basis points. 17 of these economists believe the Fed will cut rates over 50 basis points. And only one economist says no cuts at all. Markets are currently expecting about 2 cuts for this year with odds of 36.2%. 1 cut is sitting at 32.9%. So you're pretty close to 1 cut, maybe 2 cuts. 3 cuts is priced in at 16.9%, and 0 cuts is priced in at 10.6%. Now, here's where you get into the lower odds. There's 3.2% chance of 4 cuts and a 0.2% chance of 5 rate cuts this year. CNN's Fear and Greed Index today is sitting at neutral at a number of 50. On Friday, you were at 47. Market momentum is in greed territory. Stock price strength, this is net new 52-week highs and lows on the New York Stock Exchange, is in extreme fear territory, only at 1.98%. Stock price breadth is neutral. Put and call options is in greed territory. I don't know if they're taking this from today's numbers, because if you look at the S&P and the VIX today, there's a lot more puts being bought than calls. So I'm not exactly sure what that means, but hey, we'll let CNN do their own thing. Market volatility is neutral. You can see the VIX and its 50-day moving average. You're definitely starting to move up on the VIX, closer to that 50-day moving average, but you're still off of that at least a little bit. Safe haven demand is neutral today. That is the difference in 20-day stock and bond returns, but you're definitely starting to see an uptick there. It looks like bonds outperforming stocks by about 2.37% over the last 20 days or so. And then junk bond demand, junk bonds versus investment grade, is sitting at about 1.63%, which is also neutral. Most recent AI investor sentiment survey shows 40.8% of investors are bullish, 35.4% are neutral, and 23.8% are bearish. Tesla stock today had some very bullish option activity from big money. You had 86% of the option orders today from big money that were bullish or positive, so that is great. Overall, very low dollar amount though. There was only 13 trades totaling $5.7 million. That's by far the lowest day that I have ever seen for Tesla. So there's just not a lot of activity in Tesla's options market by big money these days. If you take a look at the activity on the options chain that expires this Friday on May 17th, you have calls open interest of almost 54% and put open interest of about 46%. The volume today was 56.6% calls and 43.4% puts. You also have an update from S3 Partners over here about Tesla's short interest. So it says Tesla's short interest is 18.47 billion, 109.66 million shares shorted, 3.95% short interest of free float. They say we've seen short covering recently with 3.57 million shares bought to cover worth $602 million, a negative 3% decline in total shares shorted. Shorts are down 458 million in mark-to-market losses on today's 2.5% price move. Tesla shorts are now up 1.61 billion in May and up a whopping 7.18 billion in year-to-date mark-to-market profits. On that note, Holmar's catalog wrote this post on X. He says, lately I've noticed more Tesla shorts losing their cool and lashing out in anger against me, calling me a liar, accusing me of all sorts of things, and telling me I will be charged with fraud. This is exactly what happened in 2018 and 2019, right before the short squeeze. He goes on to say, take it for what you will. To me, it has often been a leading indicator of when the shorts break mentally. Even on this post that I just read you, there's a lot of Tesla bears that are coming out here and getting pretty angry. I think he might actually have a point. If inflation does actually decline on Wednesday, if you do get a more dovish, less cautionary Powell on the economy, then that could be a really good setup for Tesla this week. Now, I think Walmart's a big earnings to watch for as well. They report Thursday pre-market. If they have negative things to say about the consumer, about the economy, the way that people are spending money, that has really bad negative implications for the overall economy. And I think that's something big that we need to be watching for that could kind of surprise the markets, maybe catch a lot of people off guards, just like it did back in 2007 in August, on August 14th to be specific, when Walmart warned about lower profits because the consumer was pulling back. That started about a 3% downdraft in the S&P following what Walmart said. So I think Walmart can be a canary in the coal mine, if you will. I look at it as kind of a smoking gun for the consumer. If Walmart says people are doing just fine, then I mean, that's what I'm going to go with. More than the Fed, more than the data. Whatever Walmart says, I think it is definitive. Walmart is the biggest retailer by far. Like, they know how people are doing. They see consumer spending behaviors. So, for the bulls and the bears, I think Walmart is by far the biggest earnings to judge the economy. And that's like real time. Walmart's going to discuss what they are currently seeing as far as consumer spending behaviors. And I don't know if you guys have been in a Walmart recently, at least the ones by me, they're not nearly as busy as they were before. So I'm not that confident in what Walmart's going to say about the consumer or the economy, if I'm just being honest with you guys. Nonetheless, Tesla stock is still up 1.6% here on the day today. So it was overall a pretty good day for Tesla. Now, Tesla was above its 50-day moving average. Now you're under that. Big deal. I really don't care. I think your 20-day moving average is going to be a little bit more important, as you have already confirmed support at this level the last 2 days. Friday in after hours, you closed under that 20-day moving average, and you got back above that today. So that's important. If you can get above or hold above your 50-day moving average, that's obviously going to be important as well. But really, This week, it's all about the data. It's all about the Fed. Unless we get any kind of big news from Tesla, good or bad, I think the Fed and the data is probably what is going to move the markets. If indeed Powell is dovish and markets like what Powell has to say tomorrow, and indeed inflation comes in better than expected on Wednesday, then I could definitely see Tesla breaking into the 180s again. And I think Holmar's catalog, Omar over there, could have a good point that maybe it could be a breaking point for the shorts if Tesla does start to rally. And again, if you do start to see inflation falling and expectations for Fed rate cuts also rising. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day. By the way, if you guys would like to come trade with us live in real time, come join the private trading community. Check out that link down below in the description of this video. I did just put out a in-depth analysis, 6,500 characters long. It's kind of a pain to read, but I think it's worth reading, and it breaks down the latest trade that I made. This is a longer term trade, one that I believe could be a once in a decade trading opportunity, if you will. So I think it was deserving of a full in-depth breakdown. Nonetheless, if you guys want to join that community, check out the link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.